Hello and welcome again to the Stocks Advisory channel. In today's episode, we will talk about ZK International Group Limited, traded at Nasdaq, ticker name ZKIN. And ZKIN, of course, showing enormous growth. You can see from October period being somewhere in the level of about 1. We reached all the way to 15 by recent days, and now we are declining strongly with huge volatilities. And of course, the first immediate answer for companies behaving like this is it's a small market capitalization company, and indeed this is exactly the case. It's only 204 million at the moment at this current price. So it was just from penny stocks to a little bit more than penny stocks, still very volatile. And you see after hours we are also declining -3%, which is within the given market capitalization, is just expected thing. So the next question is how to trade, how to ride those crazy waves here and still be profitable and safe. Well, what is important here is the behavior of general indicators and mainly moving averages 20, 50, 200. Here on the left you see their legends, if you look, being green, blue and red line correspondingly. So at the moment, starting from October, this stock is so-called 20, 50, 200 stock. What does it mean? It means that its moving averages 20, 50 and 200 are aligned like this, and usually for a company that shows this behavior plus that price action is jumping on the top of moving average moving average 20, this is a really good stock to keep for mid and long-term traders. Whenever this pattern starts to break, then you really need to think your portfolio. Maybe change it or readjust it, but until this is the case, it's okay to stay in. But what's happened recently here is very important, and it happens the first pierce of moving average 20 and first rebounds from moving average 50. This is very important indicator whenever it happens for stocks with this allocation of SMAs. It means that after the next wave, the stronger rebounds or more correction might come. And that's exactly what happened here by 7th of March. You can see usually the price was going with waves bouncing from moving average 50, you can see 20, you can see here, and then we pierced all the way down by March and we rebounced from moving average 50. So it's a next level of support, and this usually means, of course, then you do rebounds, but then it means that the next decline might be a correction, and correction means going even lower. So with this respect, we need to be very careful here, especially also given the volatility. It's one thing. Secondly, what is important is to understand that moving averages are still, of course, going high, but they are kind of trying to bend. Moving average 20 is a straight line, so there is no acceleration or deceleration in general. Moving average 50 is still kind of waving, but it might start declining immediately any moment. So it's still very volatile, and through the day of today you see, although it's still negative, but volatilities are enormous, especially upper shadow is very high of today's candle, and given the fact that trading week is about to end tomorrow, so you can't expect much growth. So you can only prepare to take it from the lower part and sell it for a higher part. And immediately before we continue, speaking of profit taking, this is very important on volatility rides, to take profit in time and really to force yourself to take it, because this is an exercise for your patience. And usually we advise 10 to 15% here. It's very fastly moving chart, and the safe margin will be 15 to 20, and then really take it. Enjoy it. If needed, re-enter or check other opportunities, but take it, because the profit taken is taken indeed. It's your money. If it's not taken, it's not taken. Until you press sell, you don't have the profit. So keep it in mind. And with this being said, let's look how to play here. Still on volatility, we could go lower, and the first level to enter would be just to buy between moving averages 20 and 50, which will be the classical entrapping price. Major declines, because the first rebounds usually takes from those levels, so you can play on the small swing, especially given that the distance between moving average 20 and 50 is still quite high for our target price, making 10 to 15%. So, and also there are some volatility levels in between, so it means that you can actually buy here these levels exactly at 779 and 598. So whenever the price goes in between these two volatility levels, it's just an immediate buy within the channel. And buy within the channel means that you start slowly entering with your money allocated for this channel. So it's not that you buy on the top, it's not that you wait until the end of the channel, you just slowly start buying with the money allocated for the channel. And this would mean that it's between 598 to actually 779. So this would be the first way to enter, because then if you enter and you still play on the volatility, it would be quite high and you can make the target profit 10 to 15%. Should we decline further? This is also possible because it's still, if it goes really for major correction, indeed it will go lower, and then we need to be prepared really for support levels to enter. And here the next support level will start at 450, and it's really safe to play here and expect very deep declines, because this is still a very small market capitalization company. You should always keep it in mind, because these companies could go extremely volatile, and if there is any negative catalyst or even any sign of it coming, it could go viral down. So you need to be prepared, and therefore this would be the next let's say reasonable channel to enter, and it will be channel S1, S2 between 360, 365 and 450. So this could be still within the volatility range of the major correction if it is about to happen. So let's write it 365 to 450. Of course, very broad channels, but also giving the volatilities, this is a normal broadness, let's say, for the channels. And then, of course, we need to anticipate more support levels. If there is, imagine there is any negative catalyst, because it's not that it's going to come, but it might be, and we need to be prepared. So this is just a risks mitigation discussion now. And imagine for such a small market capitalization company, when they see it's growing that much, but then it's starting to deplete in price, what would you do? You would, of course, try to cash as much as possible and to get as much as possible flowing cash. So simply speaking, you would do offering, because while price is quite high, you can still get extra money for your company, for operational funds, especially given the fact that within just 3-4 months you did grow with your company up to more than 10 times. So if this is coming, of course, there will be major decline. The price also depends on the offering. You never know how much it could be. Therefore, you really need to anticipate lower levels, and we will here discuss several levels, therefore. So the one would be between the current level of about 280 and the lower volatility level about, let's say, 220. Also, this level is very nice because moving average 200 by that time will be on top of this one. Let's name it S3, S4, and this will make S3, S4 a very strong double support. So whenever the price will go there, it might again rebound, and if it rebounds again, don't forget our target profit is our profit target is actually 15-20% from the money allocated within the position. So if we rebound from there, just take it, and this would be the next level if the negative, of course, catalyst comes. So this would be or something like that between 220 and 280 here. So with this being said, actually it should be quite okay to play further, and the price should stay normally, and you could still make your profit. And since it's more like for major correction, and it still could be very dangerous and volatile, it's not 5 portions play here, here's a 4 portions play. So more defensive, it means like 1, 1, 2. It means that the money you would like to allocate here, you can split in 4 portions. Then you can buy with first portion in the first channel. Then you can slowly enter and average down with 1 portion in the second channel. And if the price really goes on negative catalyst, then you can buy again with 2 portions in the last channel, which should be your major correction move. And with this being said, that's actually the numerical card here. If you're more for graphical representation, you could look here at the right side. Make a screenshot of this one and use it as a trading card. That's what we call a trading card, meaning that if you print it out, you can actually use it as your trading guidance for this stock. And that's what we do as well. We have a list of trading cards for different stocks that we follow daily and then look at the update of them. So with this being said, that's all for ZK International Group. Good luck with it. Also, please don't forget to subscribe to our channel if you're first time watching this video. This way you will not miss our new videos and new interesting discussions for US-based stocks.